I'm Michael Normyle, U.S. economist at Nasdaq. So a lot of what we saw last year, it has set up the economy for this year. The economy got to a good place last year. We would call it a bit of a Goldilocks economy at the end of the year, where we've got low unemployment and low inflation, relatively low inflation at least. We've seen the headline inflation numbers come back pretty close to the target that the Fed is looking for, and that's allowed the Fed to start lowering rates as well. And at the same time, while we've had relatively low inflation and low unemployment, we've also had pretty strong growth. So the economy is moving into 2025 with some nice momentum, and a lot of those factors that supported the economy in 2024 are still in place for 2025. It's a lot of what we saw last year has positioned us for this year. We have low unemployment, and with that low unemployment, people feel confident about spending. They've also seen inflation come down, but wage growth stay higher, so they've had real wage gains, and that's also supported spending. At the same time, the prevalence of long-term fixed-rate mortgages in the US means that a lot of people locked those mortgages in early on in the pandemic at low rates, and so they were relatively insulated from the Fed's rate hike cycle, at least part of their household debt. So that supported household balance sheets as well. And plus, it's been helped by rising equity markets in the last few years. So all those factors really support household spending, which is 70% of the US economy. And then on top of that, we could see some tax cuts this year, which would be another source to support spending too.